Hey everyone, Investing Innovations. This is Ryan, and I'm here for May 4th. Happy Star Wars Day, everyone. And we're here to talk about the market today. So today was a pretty crazy day. Let's take a look at the SPY today, which was absolutely crazy. Actually, let's take a look at it over here, over on Transpider. Let me get rid of there's some indicators going on right here, but essentially the market went absolutely crazy today. After the Fed announced that they are finally implementing the 50 basis point rate hike. Now, what does that mean? What could that implicate for the future? So they said that this could possibly become a recurring thing from 50 to 75 basis points. And it's now the first time in almost 20 years that this has happened. And as a result, the market pumped heavily today. It was an absolute reversal, and I was honestly was not expecting this. I was expecting a very bad downturn because this creates fear, but I guess this for a lot of people this was a great point to buy. So yeah, we're hitting this moving average right here. This is the I believe this is our VWAP right here, and it's sitting right below it. Let me chart this real quick. Get a horizontal line out for us. And before yesterday, I was charting about 410 was our solid support. We broke beneath that. So I was saying 405 was our really, that was like our yearly reset because this goes back a year. This is before a lot of things. And I think that this was a really good level to kind of get stopped out at because this just shows like a really good reset. Our RSI is pretty low. We well now we're at about 45, but before that we were at in the 30s, and so I thought that the market was pretty oversold. So I'm starting to kind of take more position, average in, and kind of get this going. So yeah, let's take a look at the Nasdaq. QQQ. So my prediction yesterday on my alerts, I have some good stuff going on here, but I'm gonna take off some of this stuff. I'll take off VWAP, and I'll take off drawings. Okay, so right here, I believed that right about here, I believe this was, to be exact, this is about 12,000 on the Nasdaq, and I believe that this was a really solid area of support that we would find that had things turned south. I think that it would dump to the downside. I think we would have found ourselves there. Also, real quick, let me just make sure I'm recording. Okay, we're good. Yeah, so that's really good. Let's take a look at some earnings today. So today, I believe Uber, MRO, Moderna pumped today. Uber, absolutely. I'm a big fan of Uber. I think Uber's great, but they gapped to the downside. Ended positive, actually. They were down, I believe, like almost 10% today. But let's kind of get a little. Let's get the weekly up in this. Yo yo. All right. Make sure to tune in the live stream. All right. So yeah, I'm a big fan of Uber. This isn't really zooming out, but I think that anything under $30 is a really good range to start buying some stuff, and I think I think it still speaks for Uber. Now they've had some pretty nasty weeks, as this is the weekly, but I still think that this is a phenomenal trade. Next up, for earnings, let me check my calendar real quick. Give me just a second. I believe I have. I'm just checking my alerts right now for what's up for tomorrow. Tomorrow's a pretty big day. Yeah, so tomorrow we have Square, Shopify, COP, and Fubo are up. So let's take a look at Square. I actually really like Square a lot. And right here you can kind of see that right at about $90 is where we start to kind of find some grounding, and I think that that's a really good play. We dropped beneath that 100, and honestly I believe we hit 90 today. Yeah, I believe that it just touched it and bounced right off. Anything below that, I I'd say, you know, right about 100, 90. That we have some really solid lines of support there. I think that's good. Shopify has been really beat down, but I'm still a big fan. Shopify Shopify has proven time and time again just to be a really good company, and I really think that they really are the leader in the e-commerce space. So I'd say maybe for earnings tomorrow, maybe expect some if we're expecting some downside. Probably 416, or I'm sorry, 40. That was 406 right there. Yeah, about 40, 420, 410. This moves around a lot, so but it's definitely dropped below the 200 MA. So kind of to talk a little strategy, what I love to look for is I love to look for the 200 moving day average. Let me actually add the let me add another indicator. I'm gonna add uh simple moving average, and I'm gonna add the 50 day because that is another really good indicator I like to use. Now, as you can see, Shopify has gone absolutely beat down, and for the 50-day moving average, it is fallen greatly. This is the weekly. Let me actually go to the daily. We can probably get a closer look. Let me zoom out. Okay, right here. I'd say, yeah, right. This is a really good line right here. I believe this was already drawn up by me, probably. And yeah, that's that 403 line. It's just great. That's great. Another one we'll be looking at is oh, Fubo is absolutely beat down, but I personally will not be playing this. I don't think that this is a really good setup. So I'm gonna continue on to the next one. Airbnb is such a good setup. I'm a very big fan of this. Let me let me get the weekly up in this. That's okay. So yesterday I was very close to buying, and I actually predicted it on my alerts that 140 it was gonna bounce. This was yesterday. That was the 140, and that it bounced perfectly. I think 140 is a very solid level for this. If it comes down, I will most definitely make an entry in this. And even below that, we see. Oh, let me get another line up in this. That is 130, which I mean it doesn't get much better than that. And they smashed earnings, and yeah, so that's also good. And I believe that's the 50, so it's just touched the 50. I don't know. Maybe we could see a rejection of some kind, but yeah. Okay, so next, well, that's kind of what I'm thinking for the next days or weeks. Now let's kind of take a look at some economics. So yeah, today was absolutely crazy. I believe tomorrow we have unemployment claims. Yeah, jobless claims. Out of that, with a very data-driven market, I don't believe that this will affect it too much, as much as our GDP or CPI data was. But I as you can see, like our stocks absolutely pumped today. This was absolutely crazy, and the Fed meeting just absolutely pumped. Let's take a look. I love this server. It's run by Bloomberg, and in here he always details market updates. So right here, this was Jerome Powell, the Fed speaker, and he was talking about interest rates and how that we could keep that going. I think that's very interesting. Now, to kind of bring this into a little bit of theory, I believe that tech stocks have been so beaten down that, I mean, just take a look at the Nasdaq. The Nasdaq is nasty. Nasdaq. Oh, whoops. Nasdaq. We'll just look at the QQQ fund. Uh, so this is 20% over the past 6 months. Absolutely. Let's actually look at the Nasdaq. Yeah, so about 18 to 20% over the past 6 months. Absolutely nasty. And like I said earlier, I think 12,000 is a really nice even number. We saw there's a lot of good support there. So if we do see a very down day tomorrow, like an absolutely terrible day, I will be scooping up a lot. But if this continues, I don't know. I think people are very eager to make their money back after such losses after COVID, the COVID investors. So I think that maybe these retail investors could pump the market. But nonetheless, I still think tech stocks will be the rally that leads us into a rally. That we've seen these like 60, 80% beaten down tech stocks. They're back to their year lows. It's a reset, and I believe that they're ready to go because they have a lot of value, and I think there's still room to go. So yeah, now let's talk a little bit of strategy. What I like to use when I trade, and we'll get into some lesson now that we've talked about kind of what we're looking at today. So this is TrendSpider, one of my favorite platforms. I always love to use this now. It's a kind of a product I've been testing out for a little while. Now, I am a little bit more of a long-term trader, so that's meaning holding stocks for maybe a couple weeks to a couple months, and so I buy for the long term. So with that, we use longer term indicators, and we use longer term. Let me actually remove uh, all annotations. Yeah, I'll remove all annotations, and we're just gonna kind of take a look at this for what it is. So the 200-day moving average and the 50-day moving average are very long term. If a stock dips below the 200-day moving average, I consider it to be relatively oversold. It's just a kind of I'm gonna give all the tools, but now and we use all of those, and when they come together, they form kind of a story almost. So let me add another one of my favorite indicators. Let me add the MACD. And this is another one of my favorite indicators. It goes on the bottom, and every time these two lines cross, usually something major happens. Now, as you can see, after it crossed, let me throw a little vertical line right here. After this crossed right here, you can see that there was a very nasty downturn of events. After this one as well, there's a very good upturn. And right here, it's kind of flicking to the upside. So I don't know, maybe we can see some kind of run of some sort because it has not crossed for a while. I'd say at least, I think that's about a month. But this is Airbnb. So let me go back to the S&P 500 real quick. So yeah, it's kind of flicking towards the upside. And our RSI tells us. I always love to use this. It tells us if a stock is incredibly overbought or oversold. You see that after the big COVID run, that it was very heavily overbought, and after we started to see some form of correction. And now, even here, we've seen it started to get very oversold. So yeah, those are two other ones I really love to use. Some other tools I like to use. Oh yeah, I didn't talk about the 50-day. That's a little more of a closer one. It's just the average of the stock price of over 50 days, but it's still a really good one. Let me actually give me just a second. I want to pull up my strategy real quick because I have it written down and I'm going to pull it up. So just give me 1 second. Okay, yeah, I have it right here. So yeah, let's say we're going long on a company. Let's say Nvidia, right? I love Nvidia. I mean, tell me someone that really doesn't like using Nvidia. Let me remove all of these. I was just kind of messing around a little bit. So yeah, let's kind of apply this a little realistically, and I'll introduce some more tools as well. So I'll let you make this a little bit tinier. All right, so we have a pretty good chart right here. This is the daily. So Nvidia's been absolutely beat down recently. It's underneath the 200-day SMA and the 50-day simple moving average. Now here I would usually do a fundamental analysis. Now last week I covered that. Check our YouTube channel for that. I had really good lesson on how to value a company and decide if it's worth it for the long term. I do that. Then I kind of see how it's performing in the market. NVIDIA still provides a lot of value to the graphics unit market. A lot of people still use them. And then I decide if I'm going to average in to this position or if I'm just going to see a level that I want to buy in at and I'm going to go like very hard in on that level. So yeah, that's kind of what I look at. And then I look at if it's what sector it's in, this is the tech, so or the semiconductor more specifically, the tech industry. And then we start looking at a little more things that you kind of have to learn over time by trading, and that's price action and behaviors. Now we notice that does it respect trends? Does it respect support or resistance? So let's chart that real quick. Let's see what's up right here. So there was a solid line of support right here. It did break. It kind of ignored it. Let's keep going. Did it? Is it still? Whoops. Let's see. Yeah, it respected this. Although that's not much of a line of support. I was thinking more, yeah, 178. I have that written down. So yeah, that's kind of it has okay price action. Then we kind of decide, oh, does it make big moves in a day or small moves? Nvidia really doesn't move that much, but also it's had some really good runs, like especially you can see over here. Then next I kind of like to look at some news or analyst estimates. This is a paid service, by the way, TrendSpider, but I love to use this. So it kind of tells you analysts or institutions that have their outlook on the stock. So you get to see how like positive it might be or if it's incredibly negative. And this is kind of some news from Bazinga, so that's really nice. And then some other really good information. And we can see that on the MACD. If we zoom in, it's curling around. Actually, this is a phenomenal play. Actually, I really like that's crossing over right now. Yeah, I think we could see some good upside tomorrow. And our RSI is angling up, so that means we're kind of in an uptrend. But it's at 40, so that's not too bad. Usually I look for maybe 35, 30. If it's under that, then I mean that's you got a deal. But yeah, so next we kind of see what our entry is, and that's what prices I'm willing to pay, or if I'm willing to just average in and kind of play to the downside. And then I just kind of do my thing. I set my stop loss. If I'm going really long, like Nvidia, like I've held Nvidia for about 2 years, actually 3, and I will continue to hold them. I don't set a stop loss because I truly believe that this company will go places. Now, for more riskier positions like Airbnb or Coinbase, I actually set stop losses for those because those are a little riskier places. While yes, I do believe in the company and what they do, I would rather have a stop loss because that's like my safety mechanism. That's my strategy. Because my strategy is to take into account the best situation and the worst of situations. We haven't actually talked about the upside, so let me talk about that right now. So the other kind of part of my strategy is to chart the upside. So we say, well, okay, well, what's the upside for Nvidia? We say, oh, 230, or let's go 207. That's actually much better. It actually almost reached 207 today, so I'd say maybe, yeah, right about here, about 230. So I hear maybe I'd take profit, or if it has a good day tomorrow, I'd well, usually when I go really long, I don't usually take as much profit. But assuming like if I'm not going too long, I take profit right there because that's a pretty good gain. Let me actually pip that real quick. So from right here, entry. Let me zoom into this. Okay. So entry's right there. Take profit is right here, and our stop loss. Let's say right here. So that's a risk to reward. A risk to reward is when your price target is divided by your stop loss. So this is how much I'm willing to risk, which is 12%, and this is how much my possible gain is. So you're kind of taking both sides into account. So your worst situation and your best situation. Now we usually go for 2 to 3 risk to reward, meaning we kind of keep our stop losses a little bit tighter and we want high gains. So maybe if we wanted to keep a little bit tighter in this market, because you never know how this market can perform, you would get higher risk to rewards. So that would be pretty good. So that's my strategy. It's a little more for long term, so you do have to keep that in mind. I have a lot of other stuff going on in this program that I'll probably make a separate video about, just to kind of introduce. But yeah, so I kind of just wanted to talk about the market today, my strategy, and that's pretty much all I got for you guys today. So thank you so much for coming out, everyone.